Ladies and gentlemen, we shall now proceed with our second panel discussion on the topic Consumer Protection in the Banking Sector in the Present World. I am pleased to welcome on dais the panelists for this session, Mr. M.V. Murali Krishna, Executive Director, Central Bank of India, Mr. Saroj Kumar Nayak, Internal Ombudsman, ICICI Bank, Ms. Bongi Kunene, Managing Director, Banking Association of South Africa, Mr. Bob Wigley, Chairman, UK Finance, Mr. Kanan Ramasheshan, Head Quality Initiatives Group, HDFC Bank, Mr. Ashish Pancholi, Head Customer Experience, IDFC First Bank, and our moderator for this session, Mr. Ameya Pathak, Partner, Cyril Amarchand Mangaldas. I request Mr. Ameya Pathak to initiate the discussion. Over to you, sir.
Sure. Am I audible? Okay. So this is an important topic and very pertinent one in the current environment. I'll just introduce myself a bit and then we'll go with this. I am from a law firm. I am partner in a law firm, Cyril Amarchand Mangaldas. I do a lot of banking work. So I'm not from the banks and I'm just like any other consumer of the banking services. And I thought maybe I may be able to moderate this a little differently than others do. So I do a lot of banking work. I do a lot of infrastructure financing work and restructuring work. So I'm completely non-linked to consumer services. Why is this topic important? Well, banking by definition is a fiduciary service. Funds are held in trust. Consumer protection is at the heart of the banking business. There are several systemic and prudential issues and which have origins in consumer protection. For instance, the entire 2008 crisis, which started with mis-selling of mortgages and there were not adequate credit checks, which spiraled into a different sort of problem. Financial services have become very complex, sophisticated, digitized, and consumer protection therefore is very central priority. Plus, if you see the Indian economy, it is at a very different inflection point. Digitization of banking services has played a very important role in the entire Indian economic journey. And what needs, therefore, is this penetration, consumer protection requires a very close and urgent attention. Well, with the rising number of consumer complaints and especially online and telemarketing frauds, the Indian government has been very proactive and it has, through its various ministries, proposed creation of a sector-agnostic financial redressal agency. The RBI also has integrated the Ombudsman for banks, NBFCs, and digital transactions under the One Nation, One Ombudsman approach. Similarly, the Securities Exchange Board also has allowed consumers to directly approach it through offline or web-based complaint redressal systems. We have today in our panel distinguished guest speakers who will share their experience with us in these areas. So I'd like to just do a short introduction of all our guest speakers today. And I'm happy to introduce and welcome Ms. Bongi Kunene, who is the Managing Director of the Banking Association of South Africa. And prior to this, she was the Pan-Africa Head Public Sector Banking for Standard Bank Group. She's also the Board Director of International Banking Federation. She has served in the South African government in different capacities, including 4 years in the presidency first as Chief of Staff for the Deputy President and Deputy Director General responsible for economic policy coordination. Then we have Mr. Bob Wigley, who is the Chairman of UK Finance and Board Director of International Banking Federation. Mr. Wigley also serves on various fintech companies. He's a non-executive director of Qatar Financial Center and chairman of its audit committee. He's also served in the past on the Court of the Bank of England. He is also an author and having authored a book on effects of technology on Gen Z called The Story of a Distracted Generation. He is also a member of the UK's Economic Crime Strategic Board at the Home Office, co-chaired by the Home Secretary and the Chancellor. Then we have Mr. Murali Krishna, who is the Executive Director of Central Bank of India since December 22. Prior to this, he was the Chief General Manager of Bank of Baroda, where he was Head of Corporate and Institutional Credit, large corporates. He's an MBA in Banking and Finance and has over 3 decades of professional banking experience in leadership roles. Next off is Mr. Saroj Kumar Nayak, who is a postgraduate in science and certified associate of Indian Institute of Bankers and is presently the internal ombudsman of ICICI Bank as an independent authority for dealing with consumer grievance redressal. He has previously worked with the United Bank of India for 35 years and has served in various capacities in branch banking, credit, MSME, compliance, and consumer service. He was also the Senior Vice President in Bank Codes and Standards Board of India and responsible for preparation of codes for consumers' rights. He has worked as the internal ombudsman of State Bank of India for 3 years and dealt with consumer complaints as an independent authority at the apex level of grievances redressal mechanism of the bank. We then have Mr. Kannan Ramaseshan, who is the Senior Vice President, Head Quality Initiative Group at HDFC Bank. Mr. Kannan is accountable for overseeing internal and alternate grievance redressal mechanism, managing customer satisfaction service through Net Promoter Score, leading internal service quality initiatives, and managing strategic priorities related to customer service and process reengineering. Mr. Kannan Ramaseshan is a certified Lean Six Sigma Master Black Belt, CMMI, and ITIL professional. He is also a member secretary of the Standing Committee on Customer Service and Customer Service Committee of the Board. Lastly, we have Mr. Ashish Pancholi, who is the Head of Customer Experience at IDFC. He's been with the bank for 13 years and has taken up various roles during his tenure. He has also held the position of Head Digital Transformation at IDFC First Bank. Prior to this, he was Product Head at Capital First Limited and Product Manager at HDFC Bank. He is passionate about sharing knowledge and helping others grow in their respective fields. So I'd like to welcome all of you today, and I'll begin with a question to the entire panel. And I'll start with, digital technology has made consumer protection more complex. Several scams and frauds have been perpetrated recently using digital means, which have stripped customers of savings, investments, data theft, etc. On the flip side, technology can also be deployed to strengthen and augment consumer protection processes. Do you think technology should be addressed on the topic of, how do you think technology should be addressed on the topic of consumer protection? Should the regulators limit the use of technology, prevent misuse, or encourage it? Would you like to share any best practices or examples from your respective fields? It's for the entire panel, so Mr. Vigney, maybe you can start first.
Very happy to, very happy to. Is this microphone working? Because I can't hear anything. Can you hear me? Ah, that's better.
Yes.
So I think the first thing we need to do is to separate out the issue of bad actors misusing technology from the outside and how firms use technology themselves, because they're in a way two separate issues that affect our view of how we should look at technology. We know that more and more scammers are trying to penetrate and use digital technology to defraud our customers. We know that ID thefts have reached new heights. There's been a particular significance in the UK in what we call purchase scams and indeed in romance scams. And about £1 billion in the UK was stolen last year through fraud and scams. We in the banking system think that we stop about 2/3 of the attempted fraud and we reimburse about half of the fraud that is successful. But that means still too much is still getting through. The thing that we have to recognize is that a lot of this fraud emanates not in the banking system, but outside the banking system on the big tech platforms. And for those who were at our meeting last night, I'm going to repeat that in the UK, about 80% of fraud emanates on a big tech platform. And there are three big differences between the banking system and the big tech platforms. We have a statutory responsibility to stop fraud. We contribute in the UK to a levy, which goes towards providing systems to stop fraud. And then we participate in the bill for reimbursing customers who are subject to fraud. Big techs are not subject to any of those three requirements, and that is not sustainable. So one of our key lobbying points in the UK is that we need to bring the big tech platforms into regulation as it relates to preventing fraud. Now, on the flip side, there are all sorts of very positive things that technology can do for us. And I'm thinking particularly of, if we get onto the subject of AI, how that can lead to actually picking up frauds. And I'm working with a company in the UK at the moment that's using synthetic data to customer data to better train AI-based fraud detection systems. And as we think about the legitimate use by firms of new technology, I think it's something that our regulators are very much encouraging. We think that when it works well, consumers can, in the end, from new technology, benefit from lower prices, higher and better service standards, increased access to financial services. We were hearing those incredible statistics in in India earlier on about the size of the payment system you've built, but yet the scope for further bringing people into inclusion in the financial markets. So we don't have as big an opportunity in the UK, but we certainly have one. I think it brings opportunities to improve efficiency and risk management, as well as better customer journeys. And one of the panelists commented earlier on, of course, as you enhance the technology, the more data is available, which then enables you to better target customer service in the future. So I think AI is a massive opportunity. Our regulators in the UK are very pro-innovation, technology agnostic, focusing on how can we make sure AI is harnessed to the benefit of consumers for better outcomes. As you know, our Prime Minister has led a global summit to think about how we best regulate the bad out of AI. And we've put in place in the UK 5 principles which underlie that global initiative. They are safety, security and robustness, number 1, appropriate transparency and explainability, number 3, fairness, number 4, accountability and governance, and number 5, contestability and redress. And those are the sort of overarching regulatory principles that we'll be focusing on from an AI ethics point of view. And I see amongst all my members, most of the companies and banks setting up AI ethics boards to look very specifically at how the company needs to think about regulating this new technology so as to prevent some of the unpleasantness and bias that can come from algorithmic assessment of data, but at the same time harness that technology to provide better customer journeys. I'll stop there.
Sure. Ms. Kunene?
Thank you. Our view is that you can't really stop technology. It has to be a factor of banking. It already is a factor of life for every citizen. So we've got layers of addressing the issues that are related to fraud. Firstly, in the banking system, for each bank, there are governance mechanisms which would look at legal and anti-financial crime and compliance. And those work together on a daily basis to protect a bank's customer. However, when it comes to crime or fraud, it can involve more than one bank. And in those situations, we've got enabling legislation that allows the communication, the collaboration, and the solving of a particular issue between banks. But we go another step further. We have, as I am the managing director of the Banking Association, I also chair a South African Banking Risk Issues Committee. And in the SABRIC platform, it's designed specifically to allow the banking community to collaborate among itself, but also collaborate with the law enforcement. And in the law enforcement sphere, it would be the banks, the platform for risk, then there will be the Department of Justice or the criminal justice system of government, and the Financial Intelligence Center. What that helps us with is that the information flow is in one platform, it's communicated to all banks simultaneously, and the act of fairness, transparency, and addressing customer problems is addressed in a systemic manner. Apart from that, because we have seen a lot of a rise in scams since COVID, we have created a forum of conversations where we've agreed what are the fraud principles that we are addressing. And when there's a need to create systems or patchwork in each of the bank's systems, we address that again simultaneously. And we would even communicate with the central bank, the Reserve Bank of South Africa, on those new methods of looking at the firewalls that we are building as the bank. So on one hand, we have ultimate control of the rails for payment for the banking system, but also together with the regulators, because we've got conduct regulators and the prudential regulators and the credit regulators, we also look at the question of crime, fraud, corruption, how it permeates our system. There's maybe one area where I can't say we are at the top of things. That's when an incident starts in the real economy and moves into the crypto area. Because there, we need the collaboration with the international organization once we are on that stage. And it has proved to be quite challenging in a sense because of the complexity of tracking that, but also the time frames. If you do not see the problem immediately, it can take you a while to penetrate into the other systems or to collaborate with the rest of the world. But technology is a factor of life, and we're living with it.
Great. Good to know. Mr. Saroj Kumar?
Yeah. Definitely, it's a fact that frauds are increasing day by day. And this is the responsibility of the institutions to protect their customers. Then every bank, every organization have its own systems and procedures. The fundamental things which we employed at our bank is for every transaction, if the limit crosses a threshold, there would be second factor authentication. Lot of velocity checks. Then the EFRM we have introduced, which is not only preventive, but at the same time stops certain transaction. If he feels that, yes, this is going above a certain limit, automatically that is stopped. And it gives the time to the consumer, to the customer to think whether whatever that is happening, that is right or not. Therefore, at a certain level, after certain transactions, if he gets a break, he will understand what is going to happen. But whatever that is possible, we can do at the institutional level. But that will not be the all. Unless and until the customer is properly educated on this one, the awareness of customer is the key. And when we think that we have made everything available to the customer, but there is no end to that. The scamsters are more smarter than us. Their innovations are probably faster than us. Therefore, the moment we think that we have plugged X, the Y is coming. When we are plugging Y, Z is coming. Therefore, parallelly we have to work. Number one, on the side of the bank or the institution, when we are gearing up ourselves, doing the innovations, plugging certain things, at the same time creating the awareness among the clients, both should go hand in hand. Otherwise, it will not be possible. But when you closely analyze, the scamsters are not within the country. They work across the globe. The calls will come from somewhere down in the deep of the globe to a customer in India, and everything happens, and it is difficult to get the trail.
And the calls are also masked.
Therefore, in such a scenario, the collaborations, what probably we are doing, this type of more collaborations, more committees, more approach is a must. Otherwise, individually as an institution, as a country, it is difficult to find this type of manner. Therefore, this is very good initiative as far as we are concerned, and I am very thankful to IBA that this opportunity is given. But this is the starting point. We need to collaborate more and more. But luckily, when we analyzed my own data for last year 23-24, though we say that frauds have increased, but percentage wise it was just 0.0003%. That means this is the time when we should act unitedly, see that how we can get the best practices from one another, implement this one and protect the customer. Thank you very much.
So,
yeah. So I will just speak in the Indian context, first of all. I agree with Madam that actually without technology you cannot live. Technology is now the backbone. People see in India the way this digital banking is progressing. So naturally, and it gives a lot of ease to our life, and people are sitting in the house and doing the business and doing the traditional banking transaction from the house itself. So naturally, the popularity of the digital transaction has increased. And particularly the first speaker in case of Mr. Kant has told that actually with the advent of the UPI in 2016 in India, it's become a digital banking powerhouse in India. As on the last March 2024, as per the RBI data, the UPI transaction has already crossed 200 trillion rupees. So naturally, we cannot go back to that traditional banking, leaving behind the digital banking. So it has to go, we have to depend on the technology. You cannot go without technology. That part is absolutely clear. Now the question comes about the fraudsters, the frauds that are taking place. Yes, as per the latest RBI data, the frauds amount and the number has increased 5-folds. That part is very clear. But if you analyze these frauds, you will find that as an internal ombudsman of 2 big banks, for the 5 years, I have come across at least more than 1 lakh of complaints. And this is my experience, that what Murali sir has told, that actually the most of the complaints regarding to the digital transaction, fraudulent transaction, I can say, these are customer-induced transactions. Because if you see the 8 typology of the frauds, the fraudsters are using, that is your identity theft, phishing, your web scheming, and psychological, social psychological manipulation, and your data theft, as well as your, these are all the type of methods that are being utilized by the fraudster to defraud the customers. Out of this 8, people find all these particular methodology that is adopted by the fraudster can be controlled by the customer himself, except the data theft. That is, a bank is responsible to the bank, and particularly in India, I'm telling you, the technology are so strong. It is my opinion, the data theft is very much visible, except in 2016, that was happened in Bangladesh. That was but in India, so far, we have not come across such type of incident. And if you see this phishing as all this methodology that is adopted by the fraudster, what is happening? The customers are induced by the fraudster to share all these payment credentials to the customer, to the fraudster. So ultimately, the fraudster is doing the transactions. In my opinion, the latest example I can give you, that one case has come to me recently, that as an ombudsman to take a decision, that a senior citizen has lost 4.8 crores in a series of days. How it has happened? The fraudsters are using 2 ways. One is convincing them to invest, number one. And second is threatening the customer that you have received a parcel and it contains some of the illegal goods. And already the police has taken into cognizance and you will be in trouble. So out of fear, without taking any information from the bank itself, they himself is transferring the funds the days together. So here I am telling you that actually what happened, apart from this technological side, if you will say almost all banks are taken all maximum steps, particularly whenever addition of adding pay, OTP is going to your station. And in case of the present bank where I'm asking, there is an additional factor, grid card authentication is there. So many things. And in case of the present bank also, whenever there is a speculation, suspicious transaction, immediately IVR call is going to the bank, a customer. And even after that actually if the customer is ignoring and doing the transaction, the bank cannot do. So in those cases only, the customer's awareness is much more important. In all the meetings wherever I attended, I always tell the customer awareness is most important is for so far the Indian context is concerned. In so far I have analyzed this 1 lakh, more than 1 lakh complaints in my tenure I have seen. Particularly these urban people are more vulnerable or enticed by the fraudster to invest in certain amounts in the as per the fraudster's direction. But in case of the rural people, particularly rural customers, will find they do not understand the technology, and by mistake they are enticed by the customer, fraudster, and doing the transaction. Particularly in case of, I am giving a very right example, in case of UPI is a very good payment mode, but question is that particularly people do not understand what is a push and pull. The UPI transaction takes place through push and pull method. If the collection request is coming from the fraudster, these people are not understanding and authorizing those requests so that the money is going out of the customer's account. So here, in my only submission is that actually all banks should give the customer awareness program, particularly more important in case of Indian banking system. And I have seen many banks, even including RBI, also started this awareness program, like taking the most important persons from the society. And in case of specific bank also, in my bank also, particularly where I am posted here, I found that Beat the Cheat, some social program they have started, and also giving links and giving in the website itself. There is an education message that's giving how to combat with this type of fraudster. So I think, in my opinion, in case of Indian technology are good. There is no very little chance of the data theft by any fraudster. Only thing there is we have to take a lot of care to avoid the customer.
Sure, thank you. Mr. Ramaseshan, any quick word from you? And then
First of all, I agree with the comments of the panelist, right? So we need to understand that there are some basic premises, especially with respect to frauds. Can we eliminate frauds? The answer is no. Can we reduce frauds? The answer is yes. Are the fraudsters smarter than us? Absolutely yes. So which means, what is happening in the frauds? There are two things which is happening. One's the voluntary frauds and the involuntary frauds. Whatever technology we use, whatever artificial intelligence, machine learning, big data we use, voluntary frauds we cannot stop. The only thing which we can do is the involuntary frauds. So we did analyze, and there is also a misnomer that the senior citizens are more gullible to frauds, but that is not the reality. The data, at least for the last 3 years, I have seen that the age group of 21 to 40 are more gullible. I agree with the internal ombudsman's statement. They say the youngsters are more gullible because of the greed for quick money. So also Mr. Murali talked about the various technology. See, I will tell you in the last 2 years, what is happening as far as technology is concerned in the current banking arena and what needs to be done. Two-factor authentication, most of the banks, they are going for a two-factor authentication, right? And is it sufficient? It is sufficient if I say, if we are talking about year 2022, 22, 23, it is sufficient. Going forward, it's not. So we are going to go for, already organizations are getting invested in multi-factor authentication, more than 2. I will talk about multi-factor authentication in a bit. Then talks about, people are talking about EFRM. That is good technology between 1920, 2021, 2022. Now we are going for PRM, which is proactive risk monitoring. That will help us to reduce a lot of frauds. If I take a step back, so frauds. What are all the various channels or the ecosystem where the frauds are happening? Number one is UPI, purely with respect to the volume. Every bank will say their UPI transactions increase by at least minimum by 40% year on year. So the count of frauds, UPI is number one. From a value point of view, net and mobile banking are the number two, because NPCI thankfully has given a lot of good restrictions as far as how much transactions can happen in a day, right? Then comes UPI, then cards and net and mobile banking, purely from a volume point of view. As far as value is concerned, net and mobile banking. So what is the various modus operandi? It is wishing, swishing, skimming, screen sharing, remote screen sharing. These are all the various things. So what is the latest technology which is available? The latest technology which is available is proactive risk monitoring, two-factor authentication, which is currently there. Then we call it as RASP, remote, which is basically, that app is basically will ensure that some rogue apps are not in your mobile. That is one. Remote access screen protection, if I have to, if my memory serves right. So these are all the various technology. Will it help? It was helping. Will it help? The answer is no. We have to go from two-factor authentication to multi-factor authentication. I earlier mentioned about multi-factor authentication. See, it is a chicken and egg, right? If I am asking the customer to do one more authentication, either through a QR code or through biometrics, it is going to inconvenience the customer. So there is always a fine line. For a smarter person who will say that, oh, I know I am not susceptible to fraud, so it is inconveniencing me. But at the same time, so you will suppose if a bank is going for an advanced level of authentication, it is always a tightrope walk. People will say that you are not customer friendly. Your app is not customer friendly. You are unnecessarily disturbing me. But from a larger context, any bank is not for fellow bankers. It is for the overall customers in general or customers in public. There, it is going to inconvenience the customers. The customers has to be ready for that. People talk about EFRM, proactive risk monitoring. Now the order of the day is adaptive authentication and behavioral biometrics, which talks basically about the customer's spend pattern. One thing which is unique, or rather I will say as an USP for any banks, they have abundance of data. I used my HDFC card even before I joined HDFC, right? I am a more than 20-year-old customer of HDFC Bank. HDFC Bank has the entire history, geography, or in simple terms, in Hindi we call it, they have the Janam Kundali of my spend pattern. As simple as that. So it all depends on how are you going to use my spend pattern, the type of spend which I do, and do a behavioral pattern, and which is called as an adaptive authentication and behavioral biometrics, which basically talks about the spend pattern and various other credentials of my spend history. So that is the trend which is going to happen in the next couple of years. So in long story short, right? So what needs to be done? Okay, these are all, people say that, okay, these are all theoretically it is good. Customers, banks and regulators, both RBI as well as NPCI, they have to work in conjunction. Then only it will happen. RBI, you see, even during IPL, RBI has spent enormous amount of money, especially for the awareness. Customer awareness is also one of the important mandatory spend for the regulated entities. They cannot say it is nice to have. So this is basically my few cents, especially with respect to fraud awareness is concerned. And last point, insurance benefits for higher impact, higher amounts, and for the higher age groups. That is also need to be a mandate. Currently, it is nice to have. It has to be a mandate, which has to be imposed by the regulator. If I see myself, put myself in regulator shoes, more insurance facilities for super senior citizens and senior citizen bracket. These are all the things I see.
Sure, thanks. Ashish?
Look, it is a complex problem to solve, right? There's no probably a straight answer to it. But let's take a couple of steps back. Who are the parties involved here? One is the consumer. Now, look from the consumer point of view. We have a consumer whose demand for a hassle-free, frictionless journey has been growing every single day, right? No one wants to now write those long forms. Everyone wants at the ease of their mobile, through probably an OTB transactions. So that's one side of the story. The other side of the story is those banks and institutions who have been investing very, very heavily in technology, right? They're putting a lot of money to ensure that all that consumer wants, that ease, is built in those journeys. So, and the third player to it is the regulator, who then has to have a balance between what consumer wants and what kind of a journeys can an institution or bank can build. Now, can we limit the use of technology? The answer is absolutely no, right? Obviously, we all need to look forward to how can we use technology to prevent all these faults. But firstly, let's go back to those consumers. Unless and until those consumers are educated or they have the awareness, none of the programs that we probably run are going to be very effective. That's point number one. Point number two is, if we talk about institutions or bank building their journeys, are we ensuring that data privacy or protection, is it embedded or is it at the DNA of their journeys itself? If you make it as a part of their journey, or the DNA as a part of their journey, I think there are lesser chances to exploit it. The third part is obviously the regulators, which comes into play, right? We need probably a better governance in terms of cadence. As he was talking about, we need to have, everyone needs to come together to solve this problem. It's not a responsibility only of those institutions or banks who are offering these products and services. It's not for consumer alone. It's probably everyone has to come together to answer this question. That's all. Yeah.
Great. Thank you. That was very insightful. My next question is for Mr. Wigley. The UK has a twin peak model of regulation, a financial conduct authority set up in 2013 that deals with consumer protection alone. How has that experience been for consumer and regulated entities?
Yeah, so we do have a twin peak model, but actually we have probably 4 or 5 levels when you add them up, really. So let me just go through them. I mean, first of all, we have the boards of companies who put the protection of their consumers at the heart of their business. We then have a conduct regulator in the form of the FCA, who definitely brings a greater focus to consumer protection. They've set out principles under which all firms have to follow those principles when it comes to treating customers fairly, but also more specific rules around disclosure checks. We then have a new statutory consumer duty. So we're actually the only industry in the UK that has a duty of care to its customers. And that duty is to act to deliver good outcomes for retail customers. Good outcomes meaning ensuring that customers get value for money products and services that meet their needs. Clearer communication and more tailored support when they need it. This has just come in. It's a new act, and we're really yet to see how the FCA is going to interpret it. The next thing is we have a financial ombudsman service. So if you do think that you've been poorly treated by your bank and you haven't been given appropriate protection, you can complain to the ombudsman. Anybody can do this. It's a free service, and they can award up to £430,000 in compensation. And then finally, we have what we call the FSCS, which is our deposit protection scheme, under which there is £85,000 protection for deposits. So it's not just a twin peak. It's actually, I would say, 5 different principles that underline consumer protection in the UK.
So I think there is a lot of action that has been taken to protect the consumer interest there. Do you think the tech literacy of the consumers has anything to do with better, guarding their interest? Because not everyone understands technology.
Yeah.
Everyone has a phone. Everyone gets messages.
Yeah.
You just click. Do you think tech literacy or increased tech literacy has anything to do with consumer protection?
Definitely. But I would say it's a subset of financial literacy more generally. So most of the banks in the UK have their own, particularly the big ones, have very extensive financial literacy, including data literacy education programs. And we work with our members to try and make sure that the coverage of those schemes is national and covers all the kind of particular subsets of consumer that might need particular help. The FCA has some responsibilities in this area, and there's also an organisation called MAPS, which is a government entity which tries to coordinate the financial and data literacy advice that's given to consumers to make sure it's available on a national level. As I said, covers particularly vulnerable groups, including the elderly, blind, deaf, the groups that need particular kinds of help.
Thank you. The next question from our side is to Ms. Kunene. Similar to the UK, South Africa also has a financial sector conduct authority. Do you think, with its mission to promote an inclusive, customer-centric, competitive financial sector, has this worked properly in South Africa? It's been 6 years now, so do you see an impact of that authority?
Yes. As part of the Twin Peaks model, we do have a system of regulation, but also protection of clients. But this actually is predated by the Consumer Protection Act. What was lacking in the CPA was that it wasn't looking at the financial ecosystem. It was looking at the commercial activities in the country. And the problem that this system of protection is seeking to address is protecting clients from making decisions which are harmful to their own interests. So sometimes it feels like it's going too far because the protection comes even before it is asked. It's provided as cover on issues. But where it has acted really well is to force similarity of standards for transparency and also accountability on the part of suppliers before any problem occurs. And it lowers the burden of proof from the client side when there is a need for an investigation. Because the investigation, if it is given to the ombuds, which is an integrated financial ombuds services office, it covers everything from insurance, pension funds, and obviously financial services. And the financial services don't have to be from banks. It's from banks and non-bank actors. So it's a very comprehensive system of protection. I think where it has worked well, it's worked well in providing all of us lessons of what's missing. Because from the Ombuds Office, definitely it shares with the banking sector a collection. They do a compendium of problems that they've been tracking in a year. Without mentioning any bank's name, but South Africa only has 33 banks. You can almost tell whether this comes from a big bank or it comes from a cooperative or it comes from a mutual bank by the nature of the problems. So the diagnostic that we get from the Ombuds Office is designed in a way that's showing us how the problem was resolved. Now, when it comes to institutionalized redress, most of it would go for the client in a way that is predetermined. So there are limits. It's not as if the client can have redress that's beyond what the harm was suffered. So that is also good for the system. But maybe lastly, where we've seen the benefit of the system of protection, it's also on the education side. Because each of the banks, when you look, we're reducing the problem to the banking system. you would find that the banks have got mainly product embedded education. What the law has put up to us now is that you can't limit your education, financial literacy and financial education to products. Instead, you have to extend it in such a way that it covers all scenarios, which means that when you are targeting, it's easier to work, or let's say for students, for defined benefits or defined beneficiaries, like beneficiaries of the government social protection programs. It also works really well in targeting senior citizens. So there is fairness in the process. Now what is lacking is knowledge system-wide for the whole country. How much do citizens really know about the protections that they have been afforded?
That's very important. I think awareness amongst the consumers as to what is the protection being afforded to them and what are their rights is also important, because just having them does not help unless they are aware that they can actually use these methods. Thank you for that. Mr. Murali, Krishna, my question to you is, the Government of India had announced a sector-agnostic financial redress authority. It has worked on some contours of the same. Do you think such an institution will help or augment the consumer protection system in the country?
Yeah, if FRA comes, it would be a very good game changer as far as customer protection is concerned. It would be a very good move by Government of India. See, at this juncture, what is happening is, a customer doesn't know where to go. There are so many redressal mechanism systems. RBS Ombudsman, Insurance Ombudsman, PFRD's its own redressal mechanism, SEBI's own score, and CPGram is there, Ingram is there. Now, for a customer who has availed a insurance product, say through a banking channel partner, he won't know to whom to approach, whether to bank or to the insurance company. Similarly, for the banker, if the customer comes, he has to again go back to the insurance partner. Therefore, to unify all those things, if we can have a FRA in place, number one, convenience to the customer, by the way that he knows where to approach for any of his financial problems, he knows that I have to go to FRA. Number two, the TAT. Now, when I, as a bank, if I have to go to my insurance partner or my demat partner, come back, resolve it, it takes time. But if it is independent FRA, then probably the TAT will be very fast. The third important thing is, now as a bank, if I get a complaint against my services, the way I analyze or an independent body analyzes, there will be a lot of difference. Number one, doing the analysis. Of course, we do that. We do the analysis. We put up new systems to try to see how the recurrence doesn't happen. That is true. But if an independent authority does that, give the direction for this institution, this is the problem, the implementation part becomes much easier, much faster. Therefore, this type of innovative, if comes, probably that will be very good for the country as well as the customer.
Great. I think a single authority is always better than multiple authorities.
Right.
Mr. Nayak, my question to you is, ICICI was an early adopter of technology and as well as cyber security methods. Are there any recent steps that have been taken for cyber security and grievance redressal that have been successful and can be replicated? So, let me touch upon certain issues regarding Ombudsman and internal Ombudsman, then after I'll come to the ICICI. As rightly told by the previous panel member, that actually, in case of Indian context, we will find there are so many avenues are there that actually where to lodge a complaint against any institution, particularly financial institution. So, but people see the history, you will find in India particularly,
after the nationalization in 1969, the government as well as the RBI has constituted many committees starting from 1972. Then its last one was the Kunene committee, which has already submitted its report and is in the public domain for comments. And you will find the most important approach is the customer side, how the customer interest is protected. So that is the most important. Everywhere in service industry, the customer is the king. So naturally, the protection of the interest of the customer is prime importance. So in this way, you will find in 1995, the Ombudsman scheme has been started. What is that Ombudsman scheme? Actually, any complaint which is not resolved by the bank, the customer can approach the Ombudsman for redressal of its grievances. The bank is allotted with 30 days time. If somebody is not getting, either not getting any response or getting any response, if he is not satisfied, he can go to the banking ombudsman, and banking ombudsman taking into consideration all the things, because it is a inexpensive, there is no cost is involved, and the customer can given a plain application or through the system, he can lodge the complaint, and ultimately his case is to be considered by the banking ombudsman. So this is a conciliatory purpose. There is nothing as a one-sided, only the banking ombudsman will give the decision. It's not a conciliatory. They will call the bank as well as the customer and come to a decision. So what happened actually? There are a lot of Reserve Bank of India has given a lot of guidelines, that actually a lot of avenues where the customer can lodge a complaint. But ultimately, the Reserve Bank have found that actually why not? There were previously 22 banking ombudsman scheme as officers are there all over India, and apart from that, for one separate ombudsman scheme, ombudsman office for NBFC and another for digital banking. So they thought that actually why don't there is a lot of confusion, because when customer is going to approach any banking ombudsman, he doesn't know where to go. Suppose my office, my branch is where I am going to lodge the complaint against that branch is in Mumbai. And where to lodge the complaint? Whether there are two BO offices in Mumbai, which office I will lodge my complaint, because the area is defined. So taking into consideration all those things, actually in 2021, RBI thought, why don't you switch over to one nation and one ombudsman? So that integrated ombudsman scheme was started, and the approach, there was no different type of, the RBI has not given any defined numbers of areas where the customer lodged the complaint. Now, this terminology has been changed. Any deficiency of service, OEP deficiency, whatever deficiency of service, the customer can lodge the complaint. So this is the end anywhere. That means he can lodge through the portal or through any office. It is immaterial. It is not going to find out where this, on which banking ombudsman office this branch is falling. It's not the responsibility of the customer. It is the customer has to lodge the complaint, or that is his responsibility. And it comes to the responsibility of the integrated ombudsman scheme, that where to this complaint will go to which office and where it is to be solved. In 2015, RBI has told that actually they are giving more autonomy to the bank. They thought actually, why don't you give, and this autonomy, why don't you give autonomy to the bank, that before the rejection, taking a concern, suppose customer complaint is rejected by the bank, why not it will go to an independent authority who is sitting as the highest authority for the grievance interest of the customer. So that internal ombudsman scheme was started in 2015. So the rule is that actually, and it was subsequently revised, and latest one is November 2023, internal ombudsman scheme. And bank has to appoint any bank having 10 outlets or more, banking outlets or more, are supposed to appoint one internal ombudsman who is an independent authority, not related to this, not related to this bank. He has to take a decision. Any complaints rejected by the bank, or is there any deficiency obviously, it has to be looked after by the internal ombudsman. So this is in a nutshell actually, and it is the way noted that actually the decision of the internal ombudsman is a binding on the bank itself. So this what happened, actually this is a comfort to be given to the customer that my complaint has been reviewed by an independent operator, it is given a good impression or is a kind of confidence to the customer that my complaint has been taken due care by the bank. So regarding question is that actually whether this has been taken up by the board or the standing committee of the respective bank. Yes, whatever decision we are taking, and particularly the decision has to be particularly go through the bank board service for a oversight view, and simultaneously the internal officer has the authority to give the root cause analysis of any complaints, particularly the fraudulent transaction, where we are giving a report to the board, and the board has to take a call, and simultaneously whether the system has to be reviewed, the present system has to be reviewed or not. On the basis of that, the board has to take call, and necessary direction goes to the concerned department to take a view on that. So this is a nutshell, this ombudsman as well, internal ombudsman exists in the bank.
Great. I think so. ICICI Bank has taken
ICICI Bank, I will speak particularly this fraudulent transaction, what are the steps they have taken. I already told in my first speech that actually when a fraudulent transaction takes place, yes, there is as per the RBI guideline, there is a beyond limit, is all transaction must be a second factor authentication must be there. Apart from that, the ICICI Bank has a grid card transaction authentication. So that is one part. And second is that actually Mr. Pancholi has recently rightly told that actually there is a certain particularly customers are downloading as per the after coming under the influence of the fraudster. So when there is any app screen sharing app is being downloaded by a customer, the screen goes blank. So that means that is not allowing this fraudster to go further. So this is one of the time. And another thing is that actually the ICICI Bank has taken in this IVR call. Whenever there is an suspicious transaction is there, usually immediately this transaction triggered an alert, and immediately IVR call goes to the customer. So whether the customer is responding, if he is responding well, is disputed transaction, immediately that payment is immediately stopped, no further transaction will take place. But if he is accepting well and good, that means he is doing the transaction, and they will allow go on doing the transaction. But when I was the IO here, I have already recommended that when the customer is not responding, because they are giving 4 calls to the customer. If the customer is not responding to the first call, what will happen? So that I have recommended, and that has already been implemented. Whenever there is customer is not responding to the first call, particularly, immediately the transaction stop there itself.
Great.
Maybe first transaction, if it is doing transaction, that means of the 5-year call, it is a suspicious transaction, system thinks that it is suspicious transaction, immediately it goes to the customer, 5-year call goes to the customer. And if the customer is not responding, because we are giving 4 calls to the customer, because by the 4 calls, end of the 4 calls, you will find that all the transactions took place. So I have decided, I have given a recommendation, that is a suggestion, that after first call, if the customer is not responding to the call, immediately you stop that. If the customer is telling that actually I am doing the transaction, let him come back, give a call to the customer care center. Thereafter, they will reactivate the payment credit.
So I think that's a great step for
that is a great step, because lot
automatically
of
the transaction gets stopped.
At least one transaction gone theek, but the rest of the transaction can be saved.
Sure.
So that is some of the few, and ultimately I have recommended for that again, that is particularly customer awareness. That is most important, because maximum amount of fraudulent transaction will take place, the customers are doing under the influence of the fraudster. That I have already told regarding this, your parcels are coming to the customers, police has already booked you. So people out of fear is transferring transaction. The latest one example I can give, the latest one, 4.5 crores, one person is lost. So with this,
I'll just move to the next question now. Mr. Kandan, I'll move to you. We have short time, but I want to cover both the questions for both the panelists here. The RBI has recently taken a number of enforcement actions following supervisory reviews and audits, including requiring unregulated entities to stop onboarding new consumers in certain instances. Do you think this creates a culture of deterrence and has a signaling impact? Can this be improved? Is it a deterrence at all, or do you think something else should be done?
Yeah, I know it's very pertinent. I know what's happening in the industry. As recent as last month, But coming back purely from, let me share my experience here from an HDFC Bank employee. Even we face this, right? And we call it as an embargo from the Honorable Reserve Bank of India that we are not. There was a full stop, literally, for us to onboard new customers. To be very honest with you, it is for the right reasons, and I repeat, it is for the right reasons. Because it took a step back. We took a step back, do a honest assessment. Where do we stand, especially with respect to where technology resilience, infrastructure capability, are we the bank for the future? So it honestly helps us to take a step back and do honest introspection and do what we can do so that we got the embargo lifted in a record time. So in all honesty, I would welcome this move. In fact, as an impacted person, I am saying that this has really helped us. Number one. Number two, in that year, it happened, I think it's December 2020 for us. December to March, we are able to, since we cannot onboard new cards, then while a specific set of efforts was happening on improving the technology resilience and the infrastructure capability of the bank, we also looked at why the customers are also complaining. In that year, we have reduced our credit card complaints. I still know the number very well, by 56%. Right? So it's a big daddy. And it's always right. We have been in a typical, if I give an example to an Indian cultural and tradition, always the senior person in the bank, we always, or in the family also, they also guide the youngsters or guide the family members. If we are deviating or if we are off track, they help us by their own means. They help us ensure that we follow the right path. So in the interest of time, I will just say it is a welcome move.
No, I think that is a great point that you made, that entities should also take the instructions or directions in the right spirit and take action which are commensurate to that, and it will only help improve the bank as well as the customer's experience. Yep. The last question here is for Mr. Ashish Mancholi. How does customer protection framework and experience get nuanced for different segments of the customers, such as HNIs, rural customers, priority sectors, as well as for different products? And maybe just to add to that, if a domestic customer is using your products somewhere outside, how does it change?
See, my view on this is the protection framework has to be agnostic of the users, right? You can't have a different framework for an HNI or for a rural customer. What in fact should happen is the framework should be tweaked as per the product and the services that we offer, right? Think of it like if you all are using an UPI as a product, think of it as a product for a minute. I think the regulation should be equally for everyone. Now, for a minute, let's take a scenario of an HNI customer who is being offered a derivative product or a PMS product. Obviously, there it has to be tweaked and has to be much more robust and stronger in terms of what all information that the customer shares, right? So from that perspective, overall framework can be generic. Product and service framework, if we have to call it that way, has to be much more tighter and sharper. Coming to the rural that you mentioned about, right? Rural now is a little different segment and needs a lot of handholding in terms of understanding and awareness. Whether it's simply selling them or talking to them about their rights and responsibilities, or even a simplest product that you sell to them in terms of, say, insurance, they should be then within the framework should be told that what they have to do, what they do not have to do. I'm just linking back to the point that was made in terms of awareness, right? Framework can be as strong as they can be, but unless there is a proper awareness to these segments, I think it won't hold.
Great. Very important and very, very pertinent point you made, sir. I think this session has been very educative. Customer awareness is most important. Added to that, all the directions of the regulators, if they are implemented in the right spirit, I think it will help us avoid a lot of frauds and other misuses. But I know we are very short of time, and maybe we just have enough time for 1 or 2 questions. And if anyone has a question to any one of the panelists.
We've talked a lot about consumer protection, but I haven't heard a lot about the role of law enforcement and what banks can do to get law enforcement involved. I'm not sure if anyone has any examples, maybe Bob out of the UK.
Sure. Yeah, we have historically had a problem that data privacy and banking law has not only stopped banks sharing information between banks, but also sometimes involving law enforcement in a rapid time frame. So we drafted a new piece of legislation called the Economic Crime Transparency Act, which came into force last year, which means whenever a bank has reasonable grounds to suspect a fraud is being committed, they can both share information between banks and with authorities immediately. So we have a very strong public-private partnership in the UK between government in the widest sense, so the National Crime Agency, the police forces, the intelligence agencies, and the banks. We all sit on a group together where we look at how we can best attack fraud. We operate within the banking system a fusion cell that puts together financial intelligence officers from banks and credit card companies and payment systems with financial intelligence officers from the intelligence agencies of the police. The banking sector actually pay for it. It operates in our building. And we put together all the information we have, and every day we go and attack serious organized crime gangs to try and stop credit card fraud and other types of push payment fraud, recover lost credit card numbers, so it couldn't be stronger. The public-private partnership in the UK between law enforcement and the banks is extremely strong and very well coordinated.
Great. Anything from Indian perspective anyone has to add? Because I think you're right, a close coordination between all the agencies involved is very critical and crucial for preventing frauds and even identification and apprehending of the culprits. And time is of essence. Yeah. Any other question? Good. Okay. I think then we'll draw a close. Thank you to all the panelists here. It was very insightful discussion. Thank you for sharing your experiences, and thank you.
Thank you very much.
Thank you all. May I request all dignitaries on the dais for a group photograph, please? Ladies and gentlemen, it's time to break for lunch. Please be back by 2 p.m. so that we can start our next session on time. May I have your kind attention for the lunch venues? Due to space constraint, we have arranged the lunch at 2 locations. IbFed and IBA Managing Committee members, please join us for the lunch at the Mexican room on the pool and spa floor. And for all other delegates, lunch has been arranged at the Malabar room, which is just opposite to this hall on the same floor. My colleagues will guide you to the lunch floor. Thank you.